You're watching Business Today Television. I'm Sakshi Batra. Well, this is Market Today. We start on another week on the back of a lot of global turmoil that we've been seeing. We've seen what happened on Thursday as well as on Friday as far as the US markets are concerned. Benchmark indices on Wall Street did see a crash up to 6%, and we've actually seen a sharp decline across Asian markets this morning as well. So we are bracing ahead for a day of turmoil as woes on the Wall Street continue after 2 days sell-off. We've actually seen the US markets, especially the Nasdaq, now enter a bear market territory. S&P 500 is down 17% from its peak. We've also seen, in just the 2 days of a sell-off that we've seen on the Wall Street, S&P 500 Russell Index, 10% kind of a downtick is what you've seen across Wall Street. And that is what has led to an Asian market opening down deep into the red. The Taiwanese market is down by about 9% odd. You can see the Japanese market really facing the heat. You're also seeing the Hang Seng down extremely deep in the red as well. 7 to 9% of a loss across the Asian markets is what you see. And the GIFT Nifty trends are also indicating to a start with a gap down of 849 points at this point in time. Remains to be seen whether this gap down will be bought into and whether we will get stabilized after that sharp knee-jerk reaction, or will things improve. Remember, US futures, there has been an improvement but are still indicative of a downtick at 900 points for tonight's opening as well. But we'll have to really see how much further do we go from here on as well. Look at the graphics on your screen. That's how the street across the world is really bleeding at this point in time. You know, what we've also seen is that in the last 1 week of a fall in the US markets, $5 trillion of market cap has been wiped off as well. Indian markets are really going to be facing a whole lot of trouble despite being lower taxed and lower tariff being put on India. It's the impact of the global markets that we are here to really face. Remember what US President Donald Trump has been tweeting over the weekend and speaking about his decision, backing his decision for higher tariffs, is something that is also going to be adding on to the nervousness. Remember, he tweeted on Saturday saying hang tough. Then he's also talking about that, yes, markets are going down, but sometimes there is a medicine that's needed. Let's listen in to what US President Donald Trump had to say as far as the sharp downtick in the stock markets are concerned.
Hello, everybody. Mr. President. Good. Any questions? What's going to happen with the market, I can't tell you, but I can tell you our country has gotten a lot stronger. And eventually, it'll be a country like no other. It'll be the most dominant country economically in the world.
Is there pain in the market at some point? You're unwilling to tolerate this idea of a Trump put? Is there a threshold?
I think your question is so stupid. I mean, I think it's I don't want anything to go down. But sometimes you have to take medicine to fix something.
The Chinese foreign minister.
Absolutely. So Donald Trump really saying that, yes, he does not want anything to go down when he wants to know about the markets, but there is a medicine that is needed at this point in time. And he believes these tariffs will continue to help America, get that dominant position across the globe in the economies, and therefore he is backing up. Look at the kind of sea of red that you're seeing. 10% downtick on an intraday basis on Hang Seng. Nikkei down 7%, Kospi 5%, Chinese index 6.2%, and the GIFT Nifty is now indicating an opening of over 1% cut at this point in time. 918 points lower is what the Nifty is getting an indication of at this point in time. So that's the kind of loss that you're looking at. Not just that, what's adding on to the pressure is that globally we are seeing a lot of markets, retaliate. Look at the Chinese market, for instance. China has matched President Donald Trump's big raise in tariffs announced last week, upping the stakes in the trade war that could actually end with a recession as well. Remember, China has already indicated that if we will be taxed at 34%, we are going to be doing the same with the US markets as well. Of course, the foreign investors continue to sell in the Indian markets. On Friday, we saw 3,484 odd crore rupees of a net sell-off. We'll have to see whether this escalates even going forward from here or also on not. Of course, European Union, that's going to be the key next point to look at. Tonight, we will actually get to know whether the European Union is also looking at a retaliatory measure when it comes to their tariffs on the $28 billion of imports that come to European Union from America as well. They have indicated that something is on, but we'll really have to find out. Although there is also some smaller countries really looking at their own stance of reducing tariffs to cool down from their end the kind of tariff war that we are seeing. Look at Vietnam. That has said that we are going to be reducing tariffs. Now, whether that will induce some kind of a positivity, will that be important for Trump to really look at all those countries that are willing to reduce their tariffs, to cut down tariffs there as well? That could provide us some kind of a sanity at this point in time. But looks like we are bracing ahead for a manic Monday and for bloodbath on the D Street. It's not going to be looking good at all as we are going to be heading into the open. Of course, this week we also have to keep an eye out on how the two major events will unfold this week for the Indian equity markets. There's RBI policy meeting which has started today, and of course on 9th we will be hearing from the governor as to how are they really looking at the scenario globally. How is India really placed, and what is needed when it comes to the kind of rate cut season is concerned. Now let's also look at the second big important event, and that will be the kickstarting of the Q4 earnings reporting as well. So you can look at TCS that will be kickstarting this season on April 10th by reporting its numbers as well. So that's going to be another key watch out for. Let's in fact welcome our guest on board. Dharmesh Kant, Head of Equity Research at Chola Securities, is now joining in. Dharmesh ji, warm welcome. Good to have you with us. But seems like we are in for another very, very difficult day. A sea of red across the board. We saw what happened, on Friday night in the U.S. markets. Sharp cuts of near 6% across the Wall Street. Nasdaq slipping into recession. We are also seeing about a 17% cut from all-time highs as far as S&P 500 is concerned. $5 trillion of market cap wiped out in that last 1 week. Asian markets, 10% downtick for some of them in the morning trade today. Double-digit kind of a sell-off. Some of the data points are also counting out to what Wall Street is indicating in terms of sell-off has only been matched thrice in history. In 1987, then they're off in 2008, and then in COVID, the kind of sell-off that we are seeing. So this is the fourth straight instance that is being seen with the kind of sharp cuts that we are seeing. Of course, all of this as an aftermath to Trump tariffs. What exactly do you foresee in the markets? Are we in for, pain much beyond that we were anticipating earlier, sir? Could you please unmute yourself, Dharmesh? We can't hear you.
Yeah, apologies for that. Good morning, Sakshi. It's really hot both outside as well as what's happening in the market out there. And these are, the instances you have already cited, 1987, then 2008, and COVID-19. But what was the final outcome after such kind of a massive sell-off was the upward trajectory. So value picker market is this. If you are invested in the right kind of a company or sector, you are definitely going to go up from here. There may be some disruption or troubled times of volatility in the market for some more days, because this, tariff saga, hike and then, reducing it, negotiating it, it will continue for a few months. It's not going to end in a day or two or in a week or so. And this was already announced and he has delivered, Mr. Trump. And now it's the other side of the basket which have to look into and go and come out on the negotiation table. As you said, Vietnam has already hinted at 0% tariff. India was vocal on day one. That is, there is no case of retaliatory measures. We would be negotiating on the tariffs while lowering the import duty. So this is how things are likely to play out. To my mind, these are good times, though your heart may be faint when you see the stock prices going down further. But 22,000 at best, that is, market are known for excesses, but that's the level where everything gets discounted. One thing which I am very clear about, that FY26 as far as earnings is concerned, it will be difficult to do a double-digit kind of a earning growth, because these kind of a disruptions are basically inflationary in nature and will hit the consumption pocket. Salary hikes this year is not going to be great. So the real income in the hands of the disposable income in the hands of the people would be lower. So let's be prepared for that, a time for consolidation in the market. And RBI thing which you pointed out, they are in a real tough spot. because at one hand they see this inflation going up, at the same time they have to balance the growth act. But given the, I mean, 360-degree kind of balancing act view, I do think 25 basis point kind of a rate cut is coming in this policy as well.
Reopen is upon us. 7% of a downtick is what you're seeing, viewers. 21,380. There's a 1,500 point of a downtick on the Nifty. I don't remember the last time that I saw this kind of a gap down start indication from Gift Nifty, but things are looking way uglier than we were expecting it to. There was an indication of 800 and 900 point of a downtick as far as the Gift Nifty was indicating, but the pre-open is far worse. You can see a near 1,500 point of a downtick, the Nifty indicating a start 6% lower, not just 22,000, but 21,500 at the risk of being taken out right at the opening as well. That's the kind of sell-off that you could see. Remember, on Friday, you did see 23,000 and thereabouts kind of levels. What you could see today is a sharp downtick. If this were to be true and 9:15 happens on this note, I'm going to be really shocked at what traders and those who went long with at least on the weekend as far as the Nifty is concerned are going to be facing. Dharmesh ji, what's the first action at this point in time that you would advise all the investors and traders to do if this comes out to be the opening level?
So you can't do anything, Sakshi, if this is the opening level. So, I mean, even for traders, stop losses will be hard to hit because there's always the prices jump and you can't get your stop losses out. Circuit, I mean, I remember one instance where market within 15 minutes was a circuit down. So if that happens, then I mean, trading for the day also comes into the question mark. But I don't think it's going to open so bad. By the time the pre-open settles, and we will see a 3-4% kind of a downtick on Nifty and not 6%, which we are seeing now. So this looks to be a bit exaggerated. And even the Japanese market from the opening lows today this morning, they have come up a bit. But definitely it's a tough market to be. The only advice right now is don't be a braveheart from trading perspective. Don't jump your guns. Investment, you can go ahead. Sit on the sidelines for a couple of days. Let this settle out. There's no I mean, you don't lose anything if something has to go from 100 to 200, even if you get it at 120. 80 rupees still comes in your bag. So leave 5-7% on the table for this market to settle down first.
6% downtick for Reliance Industries. You also have a 5% lower tick for ICICI Bank in pre-open. TCS about 9% of a cut that you actually see. Across the board, the heavyweights are indicating a sharp lower opening in trade. Let's hope that this improves for the better. We still have about 5 minutes remaining for the pre-open trade to settle down. And then 9:15, we will be finally looking at the open. Rupee opens at 85.7, versus about $85.2 per dollar, kind of a level that we saw on Friday. But all the other asset classes, we've seen how gold has also fallen below $3,000. We've seen how Bitcoin is also softening. We've seen crude oil testing that $60 a barrel as well. It's come off from its lows, although, but the sharp downtick that continues across the board. Heavyweights sharply lower in trade today, 10% down for SBI Life, Shriram Finance, Bajaj Finance. You look at it, the screen is sharp in the red at this point in time. Dharmesh, let's go across to the globe and we'll come back to the Indian equities and see one thing settle down in the pre-open trade. Globally, how things stand at this point in time is that China is looking at a clear retaliation. They have said that we will be taxing US in the same fashion. They are also saying that they will use all their money and fiscal measures. They're willing to cut the CRR. They are also saying that the policy rates room for expansion in fiscal deficit. They have extraordinary effort going to boost consumption, and they also expect their GDP is likely to have grown by 5% in January to March. So countermeasures coming in from China, what does it really mean for the world and of course for the Chinese and Indian markets?
So actually one thing is very clear right now, nobody has any understanding of how this thing is going to play out. We all are reacting just to the situation out there. I will give you one instance. I mean, in 2008, crude oil prices went to $146 a barrel. Still, the petrol and diesel prices per liter in India did not go up 80 rupees. Right now, it is 62, $63 a barrel. Still, we are paying 104, 105 rupees a liter for petrol and diesel in India. So people have the consumption, I mean, consumers have the paying capacity. So we don't know is after this rate hike whether this paying capacity is there or not. End of the day, it's a function of demand. I think Trump administration have done this analysis. They are mindful of the fact and they understand that even after the inflationary situation, it will be absorbed by the market. Maybe a couple of quarter of transitionary period can happen. So this is where the situation is. The other factor which has emerged out of this crisis is people, FIIs everywhere. I mean, China is invested in US, US is invested in China, few of the funds are invested in India, Japanese market, European market, all. They are just withdrawing their fund because they don't know which country will be hit the hardest by this measure and how the outcome will be. So safest bet is take the money off the table, keep the capital intact, and when the situation emerges, you can reinvest. So this is what is happening as of now. Lot of cross flows will happen just because of the uncertainty which is there in the market. But such measures like China, raising the rate is again you are going in for a war rather than you are going in for a negotiation settlement, which is not a good news. And I think today's fall is just because of what China has done post our market closing on Friday. And see, the only way is negotiation and settlement of this peace process rather than aggravating it by counter-attacking. So that is not what the market will like. Market would like to see countries like Vietnam, India, and all which are open for negotiation rather than raising the tariff power. So this till this time settles, there will be disturbance in the market.
There will be disturbance in the market. But Dharmesh, I just wanted to understand, probably the markets are just waiting for that one sign from Donald Trump saying that, yes, we are willing to look at even those economies, probably, looking for cooperation, looking to reduce their tariffs so that we can cool down as well. I mean, Vietnam has talked about that kind of a stance. Instead of a tariff war, instead of retaliatory measures, if people go in for negotiations or probably cooling down, probably the markets will look for that kind of a sign. There are so many, protests happening within the country as well. Of course, in the US, there are so many, top voices from economy, that are talking against this kind of a tariff war, and they're actually saying that this is not going to be just hurting the world, but hurting the US as well more so. So, what do you think? Will these kind of measures, instigate any kind of softening of the stance from Donald Trump? Is that the only thing that the markets will rely on for any kind of improvement in the sentiment?
Sakshi, I mean, what is the purpose of tariff? It serves two purposes. One is it's a revenue to the government, which is collecting the import duty, and second, it is protecting the domestic industry. So, a third factor which comes into the local consumption, what the things you are required, which you are not producing, you need it from the other countries. So all these three factors have to be balanced out. Why Mr. Trump raised the tariff was one to ignite the domestic industry, at the same time increase their own revenue. With this tariff hike, what is happening, what will happen for countries like India, which is more of export oriented as a service, if the taxes are go up, so the revenue of these companies will go down. Indirectly, they will pay less taxes to the local government. So this is how things are placed as of now. So a lot of interplay of revenues of the governments are under check. I do think if Trump, I mean, after Vietnam, what they have offered, and he also gives an olive branch to Vietnam and he lowers the tariff out there, that would be liked by the market very much because then you are there that governments are willing to forego their, profits in favor of the people out there of their respective countries. In a way, somehow, again, the very purpose what Mr. Trump wanted to ignite his domestic industry maybe again come under question. But this is how things are settling. I think the Trump, what he's trying to do is not to ignite the domestic industry by hiking tariffs, but rather getting it done through tariffs by other countries getting lowered. So if you look at the analysis, Still, most of the countries are paying only 50% of the taxes what they are levying on US imports to their countries, which includes India itself. So general taxes on US imports are 50% plus, whereas India is paying only 25, 26% kind of a tariff for it. So that imbalance was there. And the reason for that is US knew it very well that whatever they are, exporting to the world is not manufactured goods, but IT related software or hardware where this tariff thing was
Yeah.
not getting reflected. So that advantage they have in this negotiation, like we are using Zoom for this interaction. This is US product, and which there is no 60%, 50% kind of a tariff being levied out there. And at the same time, the other countries, the people of countries of developing or just emerging countries, they don't have a paying capacity. If you levy 60% tax on, say, Microsoft software, so then normal people cannot use this. It's a every people use nowadays. So, they are having advantage, but definitely, as you have rightly pointed out, if Trump indicates lowering the tariff on Vietnam, this will open a right gate for the investor community and for the world to settle for this entire disruption which has happened.
Mm. There's an indication of a 4,000 point downtick at the open for Sensex, over 5% cut, and over 1,100 point of a downtick for the Nifty at the open today. 5% lower tick for the Nifty Bank. Around a 4% downtick is what you could look at as far as the pre-open trades have settled and are indicating a start at 9:15 a.m., just 4 minutes away from now. We have the small caps and the mid caps in a deeper hole. You can actually look at a 10% downtick at open for the small caps, a 7% downtick at open for the mid cap 100 index as well. All the sectors, no surprises, will be opening with sharp losses in trade today. We'll have to see whether there will be any stocks that will be having the wherewithal to stand up against such a kind of an aftermath that we are looking at, or a bloodbath at open. But we'll have to just wait to see how things shape up. 3 minutes and we will have all the prices right in front of us. Dharmesh, did you see 2020 kind of a black swan event, getting initiated because of Trump tariffs? Or do you believe that whatever we are seeing right now could just be making a case for a deep bottom, and things could improve just with that one instance that you and I are discussing? If there is any positive trigger that comes, we could be in for a very sharp recovery, and therefore this becomes, a point that everybody should probably look at their own investment strategies.
See, I hope to believe on the later part. So that is the pray and hope that things should happen. But knowing the gentlemen out there in the US, it's difficult that that's likely to play out because they are hard negotiators. And see, both of them, whether it is Mr. Trump or whether it is Elon Musk, they are businessmen at first. And they have earned their money hard way. So I don't think they are more of a politicians, but they are businessmen. So they will not let this settle so soon. So they will only get it settled in their own favor. They are hard negotiators. So difficult to say, but yeah, hope is definitely that if gates open up for negotiation and he does that is see, the concept was reciprocal tariff. If the other country has lowered their tariff, then you should reciprocate by lowering your tariff as well. And that is what the entire thesis of this levying of reciprocal tariff was. So let's see, if one good silver lining comes through, then definitely there will be many people, many countries in the queue to go ahead with reducing the tariff, and then this thing settles down. The other aspect would be Q4 earnings, which will be underway this week itself. And if the management give some source of a confidence, then this will be we would be laughing it way out maybe 3 months down the line.
Okay, 1 minute to go. Does India have any advantage over others with, not having been taxed as much and probably having a softer stance or better negotiating skills at this point, Dharmeshji? Quickly.
Yeah, India definitely has an advantage. The very fact that he has not levied the tariff so high, and he left the window gate open. The reasons which he cited were soft reasons. Labor conditions and things like that, rather than citing you are levying this much kind of a tariff. And India has already done lowering of tariff on, say, Harley Davidson or a bourbon whiskey kind of a thing. So that gate has already been opened by India. We do have an advantage out there. But how this is going to play out in the entire consumption is yet to be
Okay.
seen.
Yeah, we have the first tick. Let's go across to the markets. 21,800, 4.7% lower, 1,086 point of a downtick on the Nifty. The Nifty Bank, 1,650 points lower, 3.3% of a cut on the Nifty Bank, 49,865 as far as the Nifty Bank is concerned. Let's look at the broader markets, the mid and the small caps as to how are they taking shape at this morning trade. Slightly better off that the pre-open trade was indicating, and let's hope that this improves. Mid caps down by 5.5% at 47,879, 2,766 point of a loss as far as the Nifty mid cap is concerned. 6.8% of a loss for the small cap index, 14,641, 1,045 points of a lower take as far as the small caps are concerned. Let's look at the other heavyweight counters. Reliance Industries, let's pull up all the IT stocks. Remember, those have been the big drag points as far as the markets are concerned. 6% lower for Reliance Industries at 1132, right at the opening. Take 72 rupees lower in trade. TCS down by 6% at 3100 odd levels as well. Let's also look at some of the other key stocks. 6% cut for even Infosys. It's a deep shade of red as far as the markets are concerned. IT index down by 6.6%, and that's clearly being shown as far as some of those stocks are concerned. Only 43 advances to 1923 declines at this point in time. There's a sharp downtick as far as the markets are concerned. Mid and small caps down by 5.5%, over 4% cut for the Nifty at this point in time. 2,930 points of a cut for the Sensex as well at this point. Ladies and gentlemen, it's not a good start that we have been seeing, but this was largely being expected. But 22,000 is coming back. Let's hope that that continues to improve and we actually improve from this level onwards. Let's look at some of the key sectors then. The 100 index is down by about 5 odd percent. Let's look at any stocks on the Nifty that are in the green today. No stocks which are in the green. All the stocks on the Nifty are down in the red. 10% downtick for Trend at 5,006 levels. Tata Steel 9.5% lower. Tata Motors 9% lower. Adani Ports, JSW Steel, Ram Finance, Bajaj Auto, Geo Finance, all of them with deepest cut that you can actually see on the markets. Bharti Airtel down 4%. You can also see ICICI Bank down by about 2 odd percent. That's the kind of move that we are looking at across the board in trade. Geo Finance, BEL, you name it, all the stocks are down as far as the Nifty is concerned. Let's look at some of the broader markets and the Nifty bank names also. Actually, the Nifty bank names, you have all the stocks again in the red here. Over a percent cut for ICICI Bank, SBI, HDFC Bank, about 2% lower, but which is the top losing stock here. IDFC First Bank, IndusInd Bank, despite that positive business update, 4.8% lower. Canara Bank, Bank of Baroda, both private and PSU banks are actually sharply lower in trade today. Let's look at some of the other spaces. Let's look at the mid-cap 100 index that's down by over 7% to see what is the kind of mood here. Again, all the stocks are down in the red for this one as well. And among these 100 stocks, you have Bharat Forge losing about 9%, SAIL, Coforge. You have Mazagon Dock Shipyard, 7.6% lower. You have Suzlon down by 7%, Nalco, BDL, Hindustan Zinc, metal stock completely losing their sheen, SJVN, sharp 6% lower, so Cochin Shipyard, Motilal Oswal Financial Services down 6%, Vari Renewable Energies, Premier Energy, Solar Industries, Ola Electric over 5% lower. You have all these stocks that are sharply lower in trade. Let's look at the small cap 100 index that's down 10%. All the sectors are down in the red, viewers. You talk about the PSU names, you talk about, any sector where there is any kind of a breathing space. No, you have autos down by 5%, PSUs down by 5%. IT down by 7.5% now, oil and gas down 5%, 6.5% loss for the capital goods index. All of these stocks are down. I think there is just a shade of green on Bharti Airtel, but barring that, rest all of the stocks on the Nifty are now down in the red. Let's look at the small cap index and the stocks there. Sharp cuts of 14% on Zensar Technologies, Newgen Software, 11% lower, Reddington, FSL, you also have JWL and AFCON's 10% cuts for at least 10 of the stocks from the small cap index. It's a sharp lower tick as far as the markets are concerned. Let's in fact look at welcoming Kush Godasara. He's going to be tackling the technicals, the important person right now to really look at where does the market headed. Market expert Kush, how ugly does it get from here, or is it going to be a bottom where things are going to be improving from?
Good morning, and maybe ugly for some of them, but good for me, and I guess good for our viewers also because we have been recommending short since quite a long. So
Yes.
even last Friday when we discussed, we went short. So I hope our viewers have made some money. I was still recommended fresh shorts on ICICI Bank. I think the fun has just begun on the downside. So I hope we test 20,500 in coming months.
20,500 in coming months could be coming in. It could get uglier from here. Kush had been a big, advocate of taking short positions for months now on Business Today television, and his expectation has come true. With tariffs definitely aiding into tow what Kush had been expecting. 1,017 points lower on the Nifty. The Nifty Bank 1,632 points. Between the Nifty and the Nifty Bank, what are you expecting now, Kush, at this point in time? इंडिया विक्स में 45% से ज्यादा का उछाल अभी देखने को मिल रहा है. जस्ट एक बार जस्ट देखिए इंडिया विक्स में कितनी बड़ी इस बार देखने को मिल रहा है मूव.
तो मुझे लग रहा है कि निफ्टी बैंक यहाँ से ज्यादा गिरेगा. कहीं ना कहीं अभी भी आउट परफॉर्मेंस है निफ्टी बैंक में. निफ्टी 4% डाउन है, निफ्टी बैंक सिर्फ 3% डाउन है. तो मुझे लग रहा है कि निफ्टी बैंक में 49,000 इज द फर्स्ट टारगेट, उसके नीचे 47,000 का टारगेट है. तो यहाँ से फ्रेश शॉट्स करना है तो बैंकिंग स्टॉक्स एंड बैंक निफ्टी को कर सकते हैं.
Okay, got that. India VIX now 57% higher. There's a near 22 level coming in on India VIX. That's the kind of fear that is getting induced into the markets. There may be any safe haven in this kind of a fall in the market. What should one do?
Yes, actually, I mean, the safe havens are the consumption space which is held by Government of India. So where Government of India is investing for consumption, and that is a space to look forward to. And there the choices are very clear. One is the defense stocks. So in this correction, like Majgaon is down say 9% or 9.5%. So BEL is down 5%, HAL. These are the companies you should be looking for investment perspective. And because government's expenditure is going to continue, and these sectors will continue to report good numbers with a healthy order book. So this is one area. The other area is infrastructure spend directly, like L&T or say NCC. These are the companies which in this correction should be important too. And the third space which I would be a bit choosy about is railway infra, for example, Core International, companies like that. So to my mind, I mean, see, any day's closing is not very significant but as we discussed before the pre-open, that the correct opening won't be that bad and the market should climb over 22,000. So it has climbed that. Give it till 10 a.m. I mean, first 45 minutes, always there is a push from the buyers. After that, if it starts trading at current levels or 22,000 plus, then the sectors and stocks which we have discussed, even traders can start leveraging into them.
Okay. Kush, name a few stocks. What are you shorting?
ICICI Bank is I'm not shorting right now because I think ICICI is still near to the life high. So ICICI Bank is what I'm shorting with the stop loss at 1340. Target on the downside is 1250, below which we may even see 1200. So high risk traders can short ICICI Bank at current levels.
Okay, then Messi, would you be, would you advise that somebody does definitely go towards, this kind of a fall and look at it as an opportunity to buy into any key stocks that offer that opportunity? I mean, like stocks which have been erstwhile wealth creators are down 10, 15%. Is it, for the long-term investors, a great entry point?
It's difficult to say, Sakshi, because let's understand one thing: we are in a bear market. So in a bear market, there are sucker rallies on the upside. At the same time, corrections continue to happen during in the course of the time. But I do think from investment perspective, if you're looking at least 1 year or 9 months kind of a time horizon, this is an opportunity. Allocate say 25-30% of the money which is lying on the sidelines to be deployed into the market. Go in a staggered approach rather than a full-fledged one-time go. And they again, as we discussed a few minutes back, the sectors which I would be looking forward, which has a government of India backing for their top line for the revenues. And there it is defense, railway infra, infrastructure. These are three clear buys. One outlier which I would like to pick up in this fall is the Reliance Industries. So it has corrected quite sharply. There's a lot of value unlocking businesses happening out there. And it's a mouth-watering kind of a pricing for Reliance Industries. 1100, it's a very safe buy. So 1100, 1150, investors should be looking into that. The only advice would be
Sure.
don't go put all your eggs right now. Get it
Yeah.
staggered.
Okay, don't put all your eggs in one basket at this point in time. Be very, very careful with all your positions, viewers, at this point in time. It's a bloodbath on D Street. You are seeing an over 4% kind of a cut on the Nifty, although we are a tad bit recovered from the day's lowest point or the opening lows. 22,000 is with us. The Nifty Bank is, however, still lower in terms of the quantum and a sharper cut at this point in time. There's a 3% nearly a cut, 1450 points of a downtick on that one. All the sectors are bleeding red at this point in time. Look at the Nifty CPSE index, 4% downtick. PSU banks, 4% downtick. Financials down by 3%. The Nifty bank down 3%. Metals have lost their sheen. 7% of a lower tick is what you see on the metal space. Remember, this has been, something or a space that has been impacted because of the global demand and the impact of tariffs again. FMCG 2% down. This is still better off than the other indices because it is inward bound. It is based on your own consumption at this point in time, domestic demand. But IT sector, one of the biggest, weakest links that we have seen over the last few weeks when tariff talk had only been on the rise. You have seen an over 6.5% kind of a cut on the IT pack today. Oil and gas about 5% lower. Capital goods about 5.5% lower. It's an all across this screen a deep shade of red at this point in time, and something that probably you may not have seen in the recent history. But at this point in time, Kush, where do you see things going from here? Are we at the risk of breaching earlier lows or the recent lows as well at this point in time immediately?
Yes, definitely. I think, overall, you look at the pressure in the market, defense and all PSU stocks. I think we are seeing more pressure, and I think this tariff war is going to, get more deeper and deeper. I'm sure Trump has made it clear that, to clear their deficit, he's going to keep this tariff open. So I think, yes, still we are going to test new lows.
Okay, got that. Dharmeshji, that's an important point, and I wanted to discuss that with you. What Kush is saying is that this could only be just the starting point. What we got on April 2nd was the first set of tariffs, and in fact, there were statements even beyond that. Remember, the first day we saw pharma stocks really rallying in trade because they thought that they are safe. But comes the next day statements that pulled down the pharma index sharply lower in trade again, saying that yes, there are other sectors that have not been talked about will come in future. So pharma, semiconductors, they're all on radar. There could be future tariffs that they are being looking at. As also, there's a separate category, and there were statements coming out from Donald Trump were pretty stark and bold. He said that we've never seen tariffs on pharma like before that will be coming in. Those kind of statements really coming in, and that pulled down and spooked the D Street investors as well. What if this is just the starting point and things could get more ugly from here? What are the chances and the odds of that?
Sakshi, I hope there was some predictable meter through which Mr. Trump can be predicted. So he defines unpredictability to the best. So we cannot, it's very difficult to predict what he's going to do next and how he is going to react to different situations by different countries. So whether he will levy a tariff on pharma or not, semiconductors, as you said, but semiconductors, they are the ones who are the chip makers. We are just the assembler. India doesn't make any semiconductor. What we can do, the technology is not there. That technology, the IP is with them. What happened with iPhones? The shipment in the month of March was the maximum. Why? iPhone has been, it's a product of US market, but since it is manufactured in India, and when it will be imported into US, it will be taxed at say 25%. So that, I mean, there are too many interplays. Semiconductor technology is with them. Intel has the technology. They would be manufacturing in India. If it goes back to US at a higher rate, they are making themselves very expensive. So I don't think it's so easy to, do things. Had it been so easy, he would have already done it in the pharma as well. So he's making his, backup, I mean, first into place, and then he is levying the tariff. But he's so unpredictable. It's very hard to take a judgmental call whether he will do or not do. He may do, but he may roll back. But to my mind, I think the maximum damage through tariffs announcements has been done. Now it's the other side of the, I mean, chapter which has opened is the negotiation chapter and how other countries will lower the tariff. And to that, Mr. Trump should be obliging by doing the reciprocal thing. He should be also lowering the tariff. If that happens, then I think this is settled. Otherwise, till the time this happens, this volatility will continue with a downside bias.
This volatility will continue, Dharmeshji, but what about all the sectors also, all the asset classes coming under pressure? Not just global equities, we're seeing what is happening with even gold, which is otherwise seen as, a safe haven asset, but even that is coming under pressure. We're seeing what is happening with crude oil as well at this point in time. Even crypto, for that matter, is coming down. So all the asset classes are actually sailing in the same boat and are feeling the pressure because we do not know what is going to be coming forward from here. What exactly would you advise retail investors who are just probably just holding on, finding out where they should their money at this point in time? Should they pull out the money from equities, put somewhere else? Should they continue to face how much more aftermath from here on do we have to see on our own investments? I mean, already in the last 5-6 months of a sell-off, Indian retail investors have actually faced a lot of pain. And comes this tariff that is also risking these levels that Kush is talking about, the erstwhile lows. What should one do?
Sakshi, I mean, this is the normal herd psychology. When things are troubled, people want to get into the cash, which is happening right now. But if you look at this market history, 100 years, 150 years, whatever history, any basket you take, such falls has been, the very basis of wealth creation. So if you're not invested into the market and just being troubled by say 2 months, 3 months kind of thing, world is not coming to an end. And this is just an economic war. Far worse was COVID when you didn't know whether you will survive or not. I mean, even life would be there or not was under question at that point of time. And the people who invested money at that point of time, I know many people, many HNIs who were actually pumping big time money, and the only thing which they said, कि boss, if अगर मैं ही नहीं रहा तो फिर पैसा किस काम का? If I am alive, I will enjoy the benefit rather than let it go. So this is the time when you should be into the market. If you are not invested at such times, when you will invest, when the market is running up 20,000 to 22,000, only 2,000 points you are going to get, rather than getting 30-40% on the index, you are aiming only for 5-10% in a clear water. Clear water is not for equity investors. I am very clear on that. If you want to invest into equity, these are the times when you should be getting into the market, and then wait for a couple of years, then see the returns. I mean, the 2x, 3x kind of a return happens in such kind of a market. It doesn't happen in a secular market.
Correct. Kush, coming back to you, what have you observed in the markets? Tell me, what is your strategy going to be in deep red kind of a space that we are in? What are you looking at?
So currently, what I have recommended to my clients is, I have booked 50% profits on the shorts. Maybe any short covering during the day or during the week would be an opportunity to short again. I think, now there would be some panic selling coming down after maybe 15-20 minutes because, this is this was unexpected by many traders. But if you look at FI data on Friday, they have gone home with 31,000 crore put options. So maybe it might be put itself. So I think, there would be a short covering, but once we see some short covering, it would be again an opportunity to sell.
It will be an opportunity to sell. Dharmeshji, tell us, for those first-time investors who may be looking at this as an opportunity to invest in the market, how should they go forward? How should they look at asset allocation at this point in time, sir?
See, asset allocation depends upon the age group of the investor. So first time I'm assuming they are less than 35 years of age. So at least 60% should go into the equity basket, maybe 20% into gold and 20% into fixed deposits and fixed investments. So there I think 60% allocation which you are about to do into the equity market get it staggered, get it 20, as Kush is also saying that any rise in the market may be an opportunity to sell. So I'm not ruling out that market may again correct, say, 1,000 points more. So that is always the market does things in excesses. While it's going up, it goes up in excess. Falling down, it may go to 20,000 or 20,500. But look at it, Sakshi. From here, 22,000 to 20,500 is only 1,500 points on the Nifty. Thereafter, even you are the buyer. I mean, all the bears are the buyer. And then you have the upside left to say 30,000 in next 2 years time frame. So risk reward ratio, 1,500 points you can lose from here on, maybe 5-7% or 10-15% on the stock. But the upside, it can be 2x, 3x kind of upside stock wise. On Nifty itself, it can be 30% upside for the next 2 or 3 years kind of a time frame. So please be sensible. Don't jump all your eggs immediately. Get it staggered, but start investing right now. These are the opportunities.
Start investing right now. These are the opportunities that you seldom get into the markets in case you are a long-term investor.
Yes.
These are event-led kind of a downticks that you are seeing in the Indian markets. The fundamentals remain intact for the long-term growth story of India. You can actually use these opportunities to invest in the Indian markets. If this is not when you will invest for your long-term portfolios, then when you will. That's the statement coming in from Dharmesh ji. Dharmesh ji, thank you so much for being with us in the morning edition, helping us navigate through these Trump-led uncertainties of tariff and where do we go from here. Kush, we'll continue to conversate with you as far as the key stocks are concerned. I mean, would you look at,
Thank you, sir.
as a long-term investor, Kush, I understand, you've been really looking at short positions and things are aiding, with Trump tariffs coming in with such vigor, and we're looking at trade war kind of a scenario, all of that leading to uncertainties in the market. Look at India Wix, it's rallying like never before, 57% of an uptick that we're seeing in the markets. For now, of course, I understand that, shorting may be the best scenario, but as a long-term investor, Kush, what would you really do? I mean, would you look at some stocks, and see that these are tempting valuations? What about Trend, for instance? It slipped below 5,000 levels at 4,800. When was the last time that we actually saw 13% downtick on Trend when it has been actually on a way to improve? We've been seeing defense stocks also improving on the back of huge orders coming in. Again, sharp declines that can be seen on a day like today. Tata Motors is down by, about sharp in trade today, but that's also because that they are shutting down their JLR businesses at this point in time and, reducing some of those exports there. So therefore, you do see today there is a sharp decline, but what do you have to really say about all of these fundamental stocks that are core portfolio stocks? What should one do?
I think, for fundamental long-term investors, maybe this is the right time to start investing, in parts. I mean, 25% you should invest today. I would go in, frontline stocks to invest today. So my 5 picks, where an investor who is willing to invest 100 rupees should invest 25 today. 5 stocks where he should distribute his 25 rupees are on IOC. I think IOC is a good dividend paying company, and getting at a lower valuation would give you good returns on investment because they give around 8 to 9% dividend. So IOC is my pick. You rightly mentioned Tata Motors. Definitely, I think Tata Motors is a good stock to invest at current levels. In FMCG, I would go with Tata Consumers. Yeah, and for power, I think Tata Power. But I am still avoiding, something like Trend, because I think still there would be more correction. Maybe someone can buy even Zomato. So these are the 5 stocks which I would recommend to invest today, but still not defense or Trend, because I think there would be still more downside.
There will be still more downside at this point in time. Let's recap for all our viewers. All the stocks on the Nifty are actually down in the red. Trent down by nearly 15%, Tata Steel down by 8.8%, Tata Motors down by 8.5%, ONGC, HCL, Tech Mahindra, you name it, from the IT space, they're all down. L&T is down, Bajaj Auto is down, Adani Enterprises about 5% down. All the stocks on the Nifty are sharply lower in trade because of the aftermath that we're looking at into the markets across the world. Is there any kind of a green sign? Maybe just some bit of green on consumer space, like, maybe a Godrej consumer, some green shade can be seen. Kush, do you think one has to really focus on our own domestic themes at this point in time? Will they offer any side of sanity in this weak kind of a market?
No, I don't think, right now everything is looking weak. I mean, we have outperformed global markets in last 1 week and still we are outperforming. So I think if at all, this trade war is, picking up in this week, Indian markets would see more heavy sell-off during this week. So I'm not going for a short-term position long side on any stock or any sector.
Okay, fair point. Let's look at some of the other spaces again. The Nifty mid cap is 1800 points lower in trade. There's almost 1300 point of a cut on the Nifty Bank as well. Small caps even worst hit at this point. Kush, what does one really do on mid and small caps in this kind of a market? They're always seen as the most vulnerable ones. What should one do?
One should avoid completely. I mean, exit if you are in profits in small cap and mid cap. Rather, if you want
Yeah.
to invest in small cap, mid cap, go for mutual fund right now. I mean, in parts, of course, Nifty Next 50 index is very, you should invest. ICICI is having a good mutual fund over there. So direct equity in mutual, in small and mid cap, I don't recommend at current levels, because if at all we see, recession in Indian markets, then definitely this would be the last ones to recover. So if you want to invest directly in equity, as I mentioned, stay with the front end. We are getting good quality stocks at a discount. Why not buy that? Why try to pick something from a small cap or mid cap? So if at all you want to invest in mid cap, small cap, go for the mutual funds. And for direct equity, if you are an investor, only focus on Nifty 50 stocks.
Okay, so avoid mid and the small cap stocks at this point in time. Exit in case you're holding on to profits at this point in time. In case you look as an opportunity, as a mutual fund, you can definitely look at these sharp cuts to enter a fresh or probably double down your SIPs in your mid and small caps at this point in time. But Kush, what about several key sectors? IT sector has been the worst hit because of the tariff tantrum that we have been seeing over the last couple of weeks, and it continues to battle, the sharp, blows that are being dealt from the US on that front. This is the sector that has maximum exposure with the kind of businesses that they have in the US. We are heading into an earnings season, and amidst all of this uncertainty, what would you advise on IT names like Infosys, TCS, HCL Tech, Tech Mahindra? They have already been in pain. What should one do if they have these stocks in their portfolios?
Completely avoid. I have been recommending this since a long time, that front-end IT stocks are not looking good to me. Uh, there are two reasons. First, they were overpriced. Secondly, now strengthening rupee is a concern for them. And thirdly, we have already seen Nasdaq. So there will be a ripple effects on IT. So IT has a three backdrops. So one is rupees strengthening. Second, Nasdaq is already in a pain, and maybe AI bubble can come out. That's what major analysts are expecting worldwide. So I think IT is not a good sector to invest right now. I will not even invest in form of mutual funds. So avoid IT completely. Maybe you can go with new age IT stocks like Zomato, Swiggy, or Policy Bazaar, but not with traditional IT stocks.
Okay, fair point. Well, it's a bloodbath that we're looking at into the markets at this point in time. Of course, IT sector is in a void at this point in time. Mid and small caps are in a void at this point in time. Where would you still think that investors can put in some fresh funds for a hedge? Is there any safe haven push?
No, no, no hedge. Let it fall.
Let it fall more at this point in time. Look at the smile that Kush has. And, at this point in time, of course, markets have both sides. There are people who want to, buy in markets and then make money. And there are people who want to sell in the markets and make money. And Kush is happy with this kind of fall. He had short positions and he's making a lot of money in this falling market. Pharma index is also down by 3%. You can actually see a sharp downtick across the board. There is no hedge into the markets at this point in time. Should one go for gold? Is that a better space to look at, Kush?
No, I think even gold and silver have crashed long time last week. I mean, almost 8 to 10% correction we have seen there. So as of now, sitting on liquid or having an FD would be the better option. I think all asset class are going to see a good correction because gold has already touched the life high and we have seen a good reversal pattern. So avoid shifting assets. rather sit on cash, or maybe sell off equity and start mutual fund for next 6 months, or maybe invest in parts for next 6 months. That would be a better option.
That will be a better option at this point in time. That's what the suggestion is. At this point in time, we're definitely off the lowest point of the day as far as the Nifty is concerned. From about 5% lows, we have recovered. There's a 3.8% of a fall at this point in time. 22,016. There's a triple eight, points of a fall as far as the Nifty is concerned. But we still do not have any clarity as to whether things can actually improve from here on, or do we see actually continuous falling? Of course, it all depends on how the US futures, and of course in the European market, how things also shape up. We'll have to really see. And in case there are any statements from the Indian market, Indian officials as well, we'll have to wait and find out whether the finance ministry officials talk about any kind of a stance or any kind of an indication that probably India will have a better chance. In case something like that comes in, the markets will be happy to latch on to those statements. But look at metals also, 7% cut. Kush, any view on the metals pack? We were initially also, there was a lot of talk about how metals could come back in a big way in 2025. But comes this tariff blow, and of course, what's happening in China and US, and China being the biggest consumer of metals, things are only looking worse at this point in time.
Definitely, metal would be the hard hit, because China effect, and plus if we have a tariff on auto sector, the demand will go down for metals. So I think metals are, after IT, metal is a sector which is I'm avoiding completely for investment. It will take a lot of time to see recovery in this sector as a fundamentally. So after IT, second worst it could be metal stocks. So avoid metal stocks completely for new investment. Yes, of course, I just want to clarify, if you're a long-term investor, with a viewpoint of say 5 to 7 years, I don't recommend to book losses. But yes, if you're a short-term trader, or you who feel, within a year I will make money, so that, that rally from 2020 to 24, we won't make such money every year. So if you're a short-term to medium-term investor, avoid is for you. For long-term investor, maybe right time to start accumulating at lower levels, but wait for the levels.
Fair point. Okay, let's look at some of the other pockets. Autos is something that I'm looking at again, and Tata Motors, it warrants attention because it is on track to post worst single day fall since February of 2022. Tata Motors now near 10% of a decline that can be seen, 552 on Tata Motors. Another plunge as JLR stops shipments to the US, and that's why the stock is in focus, not just because of the overall blow on the markets, because it itself has said that JLR has announced it will be pausing shipments to US for the month of April in response to the tariffs imposed by US President Donald Trump on imports of automobiles and auto parts. There was a 25% tariff announced starting April 3rd. So auto sector clearly, of course, was seen as being one of the biggest hit. And you've already seen the first reaction from Tata Motors coming in, and that has led to Tata Motors on track to post its worst single day fall since February of 2022. What does one do here, Kush?
Definitely, Tata Motors is a disclosure I'm holding for long term, maybe since quite a long time. Since my family is holding the stock since the IPO in 1980s, late 1980s, but I still recommend to buy the stock on every dip. I think yes, this step is going to hurt sales for maybe a quarter or two. Around 380 to 400 is a good support. We are breaking below 200 weeks average for the first time after COVID. So technically, yes, it's weakening for the short term, but this could be considered as an opportunity to invest for long term. So from 380 to 450 is a good range to accumulate. So start saving money and start investing, because this is not the end of Tata Motors. I mean, world will settle down. So as a short term trader, definitely, maybe if you are holding shorts, that's great. But as a long term investor, I don't recommend to exit at current levels. Maybe it's right time to average it out.
Right time to average it out. Okay, let's look at Kush then to look at the strategies for the day ahead going forward. The Nifty down by about 900 points, 2,900 points of a cut on the Sensex. Mid caps down by about 2,400 points at this point in time. For the day, what is the strategy that you advise to all the traders and the investors?
So I think if we break below today's low on Nifty, which is 21,750, you may go short for a week. So this week, I think, we are going to test the 4th June low, which is around 21,200. So my first target on Nifty for this week, if you break today's low, is 21,200. So be ready to short fresh below today's low. Maybe to hedge your position, because we have seen a quick fall, we may buy 22,500 call option just to hedge, not a trading purpose. So if you are shorting one Nifty, then you should buy one call option to hedge your position. But I believe we are testing 21,200.
Okay, got that. Kush, we will thank you then on that note for being with us on the show today and helping us navigate through the first half an hour, 35 minutes of trade in this difficult set of the market. Not really looking good. Bears clearly, prowling and enjoying the tariff blow at this point in time. Bulls seeking for a hiding place. Don't know whether things will improve from here on or will worsen from here as well. So brace up. This is a difficult set of the market. Volatility index continues to be spiking, and we need to face this day together, and we will do that throughout the course of the day, viewers. We will get you all the top market voices to really help you make sense of this sharp sell-off on this trade, all due to Trump's tariffs and the global markets rout that we have been seeing across US, Asian markets this morning. And of course, we have also opened with sharp losses today. We'll continue to look at the markets throughout the course of the day. This is the day that you don't want to miss any action, any conversation on the market. So stay tuned with us on Business Today Television. We will also answer all your stock-related queries at 12 noon on daily calls. In case you need to find out what should you do if your stop losses have triggered, what should you do in case there is a sharp cut on the positions that you hold in the stock markets. Well, ask away your questions and take an informed decision by speaking to top market experts. Stay tuned throughout the course of the day. We'll continue to guide you with our top market experts joining.
A very warm welcome to you on Business Today Television and in our special series of Market Gurus. Our guest today is Mr. Jyotivardhan Jaipuria. He's the founder and managing director at Valentis Advisors Private Limited, manages about 1,500 crore rupees and has been in the markets for the last 36-37 years, spent about 21 years with the Bank of America